Hi, welcome to this video today, which is on Saturday, 4th of November. What we're going to be looking at today is two high probability trade setups in our view. They are, USD JPY and Euro JPY. And we're looking for the yen to strengthen significantly. When I say significantly, I mean by 400 to 500 pips. And I think the setups are just about to come to fruition. Okay, so when we look at the charts, you'll see what I mean. Now, in terms of that profit projection, it is pretty ambitious, but where we've got that projection from is the COT net traders positions, which regular viewers will know is our favorite tool in Forex trading. If you're new to our videos and want to learn more about it, simply click on the link beneath this video. Now, in terms of the COT, if you just want to watch the video through right now, what we always want to do is trade with smart money commercial hedgers when their positions move aggressively away from speculators. You'll see what I mean when we look at the data. Now, in terms of my view of these pairs, it is as of right now. If you want to follow our analysis of these pairs, you can join our member centre below to see our specific levels of entry, stop and target each day. Right, let's go and look at the charts. I'm going to start with the COT net traders data for USD JPY.
Japanese yen against the US dollar. It's COT data, so it's always the foreign currency first. We'll reverse it round to USD JPY in a moment when we draw our levels. But this chart here is actually a really good warning sign of a big move up in the yen potentially coming. And what I've done is I've drawn a black line here through 100,000 long contracts. This is the commercials, smart money obviously in red. And when the commercials get above 100,000 and the speculators drop short against them, you get a nice break in favour of the commercials. So this one on the left here, nice move to the upside. This one here, another nice move to the upside. Here, potentially a move to the upside coming. Now, if you take the COT data back even further, you'll find plenty of breaks like this when the commercials get above the 100,000 mark. So we're looking for a move in favour of the commercials. So we're looking for USD JPY to come down. So let's go and take a look at the chart and
US
draw
dollar,
some Japanese yen daily chart. Got things the right way around. Just draw some levels in a moment, but just want to draw attention to this peak here. That's the second example we saw on the COT chart, where commercials got above 100k in terms of yen longs, USD shorts. So heavily selling the dollar. Nice break to the downside, which is about 550 pips. Okay. Now, also on the COT chart, you'll see this peak here. The commercials were pretty long here, pretty short here as well, but they weren't above the 100k mark. They're about 98,800, so I didn't show that one. But break in favour of the commercials on both occasions. And we know now, of course, that the commercials are above that 100k again. If I draw my line straight for the resistance. Sorry, where are we? There we go. Okay, so we know, obviously, we've got the commercials on our side for shorts. Now, just want to go quickly through how this chart is unfolded, because it's basically here, people turn very dollar bullish, push her up, still very dollar bullish, and there's a lot of people want to buy the dip, okay? As we dip back, they come in to buy, okay, through the 20-day moving average, nice candle up, and then the speculators and commercials really go against each other. Now, in terms of, if you look at these candles here, it looks to me like we're struggling to break higher now. So this candle has a poke up, can't get there, comes back, can't get there. This one does, but immediately reverses. Come in again to have another go. This one is kind of indecision candle, isn't it? So just feel the upside momentum is waning. 114.50 is a level which I think is going to be hard for the dollar to hold above. 115 is really big weekly and monthly resistance as well. Now, in terms of playing this trade, how would you do it? Well, we're already short. We've got an aggressive entry in. Many people would like to have a more conservative entry. I mean, we like to be aggressive in terms of going with the commercials because our stops don't have to be too far away. And if we're stopped out, it doesn't matter. We know this is going to break in favour of the commercials, or the probability is very high if we look historically. So we're already in. More conservative entry, I think, is down here, okay? These two candles got a 20-day move-in average as well. And I think if we run this level, you could come in through the 20, or you could wait just to get through 113, just get clear of it, say 112.80, something like that. Then what will happen, I think, is speculative stops will be hit. Okay, now in terms of, I haven't drawn the weekly chart today, but you can have a look. 111 is the first support level. Okay, now in terms of, because there's so many specs in the market, okay, to be run on stop, I always view that as my first target. I always think it's going to get overrun, and my own view is we'll get down towards the 108.50 level. So from current levels, that's a good way to the downside. And let's say you're coming in through the 113 level. Where would you want to put your stop? I'd probably hang it back behind the next round number, 114.35. I always give it a little bit of room. Okay, round numbers are very psychological. So if you get through 113, even if there is a bounce, it probably isn't going to get through 114, if that makes sense. For me, this looks a good risk-reward trade. And I think, I know I said this a lot in previous videos, but just for new viewers, you see the chart in a totally different way when you know what the commercials and speculators are doing behind the chart. Okay, chart doesn't come out of nowhere, as I've always said. It is a reflection of sentiment. Also, what you can do is you can measure the size of a possible move, which again isn't possible if you just use technicals. So anyway, that is my view of USD JPY. On the Euro Japanese Yen daily chart, and just look at the CFD net traders data first of all. Now, there is actually no data released by the CFDC for the crosses, but you can actually work it out yourself by looking at what the groups have got in the major pairs that make up the cross. So Euro USD, USD JPY, then just total them up. That's what we've done. Speculators 5.47 to 1 in terms of their long positions over their shorts. Commercials 5.66 to 1 in terms of their shorts over long. So you've got the speculators very bullish, commercials very bearish, and we're at divergence here 11.13. Now, regular viewers will know we like any divergences above 10, and we'll do about 30 pairs each week, and we'll put a spreadsheet up obviously in the member center so you can see the big divergences. And if you just focused on the big divergences above 10, only traded those setups, you'd always have really high probability trades, and we think this is a high probability trade. Now, in terms of levels, okay, this peak here, obviously we came up to test it here. This blue candle I'm just on there, that is before the ECB. And traders had bought the euro into the ECB. They were expecting them to be hawkish. We're saying at the time, even if they are hawkish and they give the market what it expects, everyone's bought. But Mario Draghi had already cautioned traders against not expecting too much. So we thought prices would come down. Now, you don't need to know about the ECB necessarily to trade this move. It's just, we like to look at these fundamentals as well. It just backs up our view of what the commercials are doing. So the obvious thing to do when you're above here, just put a sell stop below the round number, and see if she follows through to the downside. So we've come in at 133.60, nice red candle, snaps through the 20-day moving average. You've got a little bit of support here, so bouncing back. Once the 20-day moving average is snapped, we're expecting it to provide resistance or prices to stall into the level. Just get above the level and stall at the round number, 133. Friday, we come off the level. Okay, so we're thinking now that basically, the buying is exhausted, yeah, and we should go to the downside. Now, in terms of resistance, it's now here at 133, round number, or just above it. There you go. So I'm looking for follow through selling. Okay. Now, in terms of where are we going to go, we can sort of make quite an ambitious projection, in my view, because of obviously this big divergence. I think the first stop is going to be these candles here. Okay. So basically around 129.70. We know there's a lot of speculators that get hit on stop. So I'm actually looking for that level to get overrun. Okay. And I think down to 128. So at the minute we're about what, 132.50 down to 128. What's that, about 450 pips, isn't it? So I think, if you want to get fresh in on this position, look, for follow through selling on Monday. And basically, I think if she starts to sell off early next week, we'll be going down further. Specs are going to get hit on stop. Our stop at the moment is at our entry point. So 133.60. So we're back from the round number. Now, while we've put our stop at entry, we don't just do it, to put our stop at entry, if that makes sense. We don't think that level is going to be hit now. Okay. So down to 128 in our view, I think it's a decent risk to reward setup. So that is my review of Euro JPY. We'll see how this one goes. Thanks for watching me. Take care. Have a good day.